Shifting focus, and if you're looking to invest in property and have a long-term outlook, then you should consider taking a look at Knight Frank's new report. This report tells you which emerging markets are good investment bets. My colleague Suyesha Sawant sent us this report with its highlights. Take a look.
Knight Frank today came out with their new report which suggests the top residential investment destinations in 2016. As per this report, Mumbai has been suggested as the most lucrative investment destination in India. Amongst the micro markets, it is Mad Marve, where the prices are likely to double by 2020 as per this report. Now, this survey has been held across 6 cities which include Mumbai, NCR, Bangalore, Pune, Hyderabad and Chennai. Of course, the Chennai market was left out today owing to the aftermath of the floods, and this market will be reviewed again in the time to come. Now, just to give you a city-wise breakdown, in Mumbai one can look out for Mad Marve, Ulve and Majivada. In NCR, one should look out for New Gurgaon sectors 81 to 95 and Golf Course Extension Road. In Pune, they suggest that areas like New Airport Road, Viman Nagar and Vishrantwadi will pick up in the next 5 years. In Bangalore, it is Panatur, Vartur and Thani Sandra, and in Hyderabad, it is Puppalgoda, Narsingi. Now, these areas have been surveyed on the basis of key drivers which include social infrastructure, job creation, land accessibility, proximity to basic amenities and the lifestyle that these micro markets can give. Of course, they are saying that this survey is completely based on the key indicators in the market right now, and like the last report which they had released in 2012, as per that report, NCR is the only market which has not done as well as they had preempted because of NGT issues and a lot of litigations that the city got into. But they are saying that if the key indicators go as per how they are promised, then the destinations that I just listed out should certainly be looked out for.
And to take that forward, we have Mr. Samantak Das, National Director Research at Knight Frank, giving us more details on that report. Thank you so much for joining us here on Magic Mixer, Mr. Das. My first question to you is, why do you think the prices will appreciate in these micro markets?
The major driver for residential market or markets, the drivers are employment generation, incremental, additional, and the new infrastructure projects that are coming up. So you have to have an understanding, proper understanding of where, which destinations, which clusters the employments are coming in terms of office space, infrastructure coming, and then you have to understand the impact. So we have done that analysis across all the top 6 cities of India, and then within cities we have identified these destinations. So major driver, employment, infrastructure. Yes, like in Mumbai, Mad Marve is only infrastructure, and there is an opportunity of lifestyle change in that zone, in that location, because of 2 infrastructure projects. One is the most important coastal road, another is the Mad Marve, that bridge linking to Warsaw.
All right, Mr. Das, according to your own estimate, tell us, how much will this particular appreciation be?
As I said, the appreciation in all these destinations is anywhere between 41% to 94% in 5 years. So if you annualize it, annual yearly would be anywhere between 7.2, 7.5% till 14%. So that's the range that we have kept, and that's our estimation. Now, real estate earlier used to be perceived as, doubling in 3 years or maximum 5 years. That's not going to happen.
All right, Mr. Das, before we let you go, are you trying to say that the time to buy in these markets is now?
Yes, I mean, this is the right time to buy, definitely, because we don't see that residential sector will go further down. So this is enough of rock bottom stage for residential sector. Now you have to understand that there is a change in the mix of investors as well. Now, first, the speculators are out of the market. Even cities like National Capital Region, Delhi, which was full of speculators, 6 months, 1 year, maximum 2 year exit horizon, it's out of the market. So today, most of the cities are now have end users, driven by end users, even National Capital Region of Delhi. Next, you have investors, definitely, but those are long-term investors. The investment horizon has changed. So earlier we used to think that let's exit in 3 years. Now they have, the horizon has changed. It has moved quite long, and it's not less than 5 years.
Samantak Das of Knight Frank, thank you so much for joining us live here on the news on Magic Bricks Now.